There's a big debate between traders on whether economics are an important factor for trading profitably. In this video, I'm going to explain why yes, they are important, and also why they are not important. My theory is that the higher the time frame, the more important the economics, and the lower the time frame, the less important they are. So let's head to the charts and I can explain why I think this. So here we are on Euro USD, or Euro against the US dollar. So you can see this chart has a very clear trend to it. We consolidated on the daily time frame here. We, very clearly up and down during this period. We weren't really creating new highs or new lows. It was just sideways. And then all of a sudden we come up very aggressively. We come down, back up, and now we seem to be correcting this move back to the downside. But to understand this and to be able to trade this, so let's say you were a typical sort of lower time frame trader. Let's say you were looking to sell this resistance level, and while it could have worked during periods, it obviously would have been blown through very heavily. Now this is again the daily chart, so you need to account for the time that this took as well. Now you couldn't really trade this just based on the technicals, and the reason is because the economics are driving this market overall to the upside during this period. So what we had here was very weak US dollar data. What we had during this period was shockingly low numbers for NFP. We had a very cooling labor market. We had 50 basis point rate cut getting priced in, and we had relatively good Eurozone data during this period. So for anyone that was swing trading, this buying market was actually very, very clear. But to anyone that was trading just technicals, you would have been chopped up on this move to the upside, and you might have been chopped up trying to sell this rise. Whereas again, anyone paying attention to economics would have known that this market had a lot of room to go to the upside. And again here, you might have profited from just trading a double top. But this market obviously is driven by economics. So what we had now is stronger US data. We're getting priced in now to 25 basis point cut. It looks like the US economy and the labor market is feeling a bit more healthy. We do also have weakening Euro data. Again, very clear that this market should now be turning bearish, as we are seeing. So to trade the higher time frames and be a swing trade, it's very, very important to get these moves, because what we often don't see is large moves based on just technical levels, really. Whereas you might see the other chart over here, and this is my day trading chart. So I have two different strategies. You guys should know that by now. So I have my swing trading strategy, which I use on this chart. I use the weekly, the daily, the H4 and the H1. And here I use the daily, the 1 hour and the 15 minutes. So the difference between these two is that overall on my day trading strategy, I don't use fundamentals. I use almost just technicals. So I do use general biases. So for example, if I am more looking towards a weaker euro and a stronger dollar, then I will have a bias to then go and start looking for shorts on euro dollar. But that's not, I'm not here saying, okay, NFP is coming out in 10 minutes. I'm going to try and trade this economic release. That's not at all what I'm doing. I'm taking my overall bias for the economics and trading then the technicals. So for example, here, I might look to sell on a retest of this low, or I might look to see a break in a retest here, which we have seen, or just general pullbacks to sell. So I'm not accounting for the overall, the whole landscape of economics and taking into account every data point. I am just taking the overall bias and a general idea of what I expect from the currencies. Whereas again, with the swing trading method, I am more looking and really digging deep into what are each economy doing, what catalyst can I execute on, what's the forecast, and that's not it. Whereas when I'm day trading, I'm just trading and following the trend, trading the momentum. That's it. And this is why I am a big advocate for a mix of economics and technicals. So if you are a swing trader, the technicals are less relevant and the economics become more relevant. Whereas if you're more looking to sort of day trade or even scalp, the economics become less relevant and technicals become more relevant. And this is, again, just my point of view based on my strategies and my experience. I know that, people go into huge amounts of data for trades, which I do, again, for my swing strategy, but for day trading, it's much, much more simple. And if you watch my previous video, you will see me explain why I have two strategies. And essentially, the day trading strategies for when I'm a little bit more uncertain about the markets, maybe they're a little bit more choppy, or there's a lot more uncertainty in the sentiment. So, for example, when we've got conflicting things going on, whether we've got Russia, Ukraine, we've got tensions in the Middle East, we've got the elections coming, but then on the counter side, we've got positive data for the US. So I can expect the US dollar to be doing quite well. We've also seen a decline in the yen. So it's, quite messy markets at the moment. So I don't want to be sat in swing trades because there's so many things going on. Something could change very rapidly. I need to get out quickly. I need to be very adaptive, which is a little bit harder when you're sat in positions that you expect to hold for 1 to 2 weeks, whereas day trading is a little bit more frequent and active and you can be more involved. The day trading strategy here, you can see I use the daily time frame just for overall trend analysis. The H1 again for overall trend analysis and just making sure my entry points are as solid as they can be, and then I execute on the 15 minutes. Whereas on the swing trading aspect, it's a little bit different. So I use the H1 just to make sure I'm not buying into anything ridiculously bearish, even though it might look a little bit neutral in the daily, for example. The H4 is normally where I execute. The daily and the weekly are where I look for the trends and the major key levels to buy and sell from. Now, the last point here is that the reason the final core reason that economics are so important on swing trading is because you aren't going to see a huge move. So let's say we are buying this support level. Normally with I'm going to use it as an example, the buying support, selling resistance strategy. So what we'd see here, you'd buy the support down here, you'd sell this type of resistance. Now this is a 260 pip move. Do you think we're going to get that from just buying a support? No. To get a 200 to 300 pip move, it needs to be driven by something. Something in the market has to happen, whether it's an economics, whether it's a data release, something here has to be a catalyst. Whereas on day trading, you can simply get, you could get very easily something like a 1-to-1, a 20 pip move, maybe a 50 pip move for the day, just trading the momentum and the trend. You don't need to overly be involved in the economics, which is one of the reasons I teach this strategy in the Discord, because I understand when we have people joining that might not come from an economics background or might not be fully developed in that field, or they're on the journey, this is the perfect strategy because it can get you involved and it can get you paying attention to what's going on while you don't have to be so involved that you need to be almost like an analyst. Whereas our swing trading strategy, you do need to be more at a professional level with the economics to understand and build a long-term forecast. So there you go. I mean, that's about it, to be honest. It's been a relatively short video. I just wanted to sort of explain my thought process on here. So guys, I'm not sure what day I'll upload this. It's currently Saturday, but I'll probably upload it next week. So have a great week. I will see you later. Don't blow your accounts as always. Stay safe.